Good morning, afternoon or evening, ladies and gentlemen, depending on where you're joining us from across the world. Welcome to a Payments, Cards and Mobile webinar in association with MasterCard. I'm Alex Rolfe, Managing Director of Payments, Cards and Mobile, and I'll be hosting the webinar today. From myself and all the panelists, I hope you're all doing well and enjoying some newfound freedoms as we move past COVID and into the summer. And if my voice sounds a little bit more gravelly today than it does normally, I apologise. I did spend quite a large chunk of yesterday evening shouting at a TV. A couple of housekeeping items just before we get started. If you do experience any technical difficulties with sound or visual, please use the user interface to ask for help, and one of the team will be with you right away to help you get that connected. This is a live event, and we will have a live Q&A session at the end with the speakers. However, please do feel free to send the questions in as we go along. If a question relates to a specific topic or slide, please just note that down in the question so that we can quickly reference back to that whilst we're answering the question. Finally, all of the assets regarding this event will be made available at the end of the show, meaning you can share with colleagues or review the information again at your leisure. And it should be noted that this webinar is in reference to a report we've done, which is also available for download, and the URL will be shown at the end of the show. Okay, so open banking is now 4 years old, and it's playing a significant role in stimulating innovation in financial services, implementing immediate payment services, and launching digital payment service schemes, which enabling payments direct from bank accounts. To take a deeper dive into the subject, we decided to create a report, which we produced in partnership between Payments, Cards and Mobile and MasterCard. We wanted in that report to explore the future of open banking in Europe. The report compares 10 European markets in terms of their regulatory readiness in adopting PSD2, their open banking API readiness, the digital infrastructure readiness of each country, and notable other open banking innovations within those markets. This accompanying webinar aims to give a comprehensive management overview of the report with speakers from MasterCard and PCM, as well as I mentioned the live Q&A at the end. And here to walk you through those topics are two gentlemen who are experts in their field and the subject matter. I'd like to introduce Horst Forster, who's Head of Research for the Digital and Card Payment Yearbooks, which is part of Payments, Cards and Mobile, and of course Jim Wadsworth, Senior Vice President at MasterCard. Horst, I'd like to hand it over to you.
Yeah, good afternoon, everybody. Thank you very much, Alex, for your kind introduction. Well, I would like to talk a little bit about open banking in Europe. Let's start with a kind of reminder. Well, open banking is effective from 13th of September 2019, which means the open banking mandate is effective. And it sets the formalized relationship between the European banks and so-called trusted payment service providers, because those TPPs have the right of access to accounts using the open banking API of the bank or EMI they want to access. The other two items to remind you for is that there's a common secure access mandate, so that these companies can only access bank accounts with the explicit permission of the customer. The other thing is strong customer authentication, which is a very detailed area which provides higher security for accessing bank accounts. The other part of the reminder for you, okay, there are new types of regulated payment service providers. There are the so-called account servicing payment service providers. This is PSD2 English, which means the account holding bank or e-money institution as an example. Then there's a new type of payment initiation service providers, which initiate payments with explicit permission of the customer. Example, as we always know, it's companies like Klarna or Trustly and a lot of others which offer these kind of services. Finally, there are so-called account information service providers, which aggregate bank account data from different banks with explicit permission of the customer. We will come back to that. But a note up front is open banking in Europe is more than an open banking mandate and open banking APIs. Well, by today we can say the PSD2 and the open banking mandates are in place, and also most of the European players have an open banking strategy in place. And in parallel to the booming card payment ecosystem, thanks to Corona pandemic, there is now an emerging open banking payment ecosystem, which I would name it. It's our digital account-to-code payments, which can be made in-store, online, or mobile, which is the, let's say, European variance of that, what we usually know from the Alipay approach, QR code, initiate payments directly from the bank account. And you see on the right a very illustrative picture of this open banking payment ecosystem. Of course, individuals and business want to pay at a merchant. This is possible thanks to a lot of payment service providers, including the card payment ecosystem. There are PayPals, there are Vips, there are Klarnas, and a lot more. And they initiate the payments between the consumer and the merchant. And then the payment is completed through the banking infrastructure between the banks, which in Europe is credit transfer, direct debits, instant payments, and the local variants in the non-euro currency countries in Europe. By the way, this is similar approach is also happening, example, in Australia or in the US and other areas of the world. The reason why this is emerging is banks have a clear strategy to expand digital banking payments to pay at merchant checkouts in parallel to cards, and the rollout of these services, implementation of immediate payment services, of course, digital technologies such as 5G internet, and the last but not least, the consumers embrace mobile payment devices, and the merchants started to embrace mobile checkout solutions, like example smart POS devices, including an ECR cash register solution and an EFT PS terminal solution, maybe with pin-on glass. And so the digital economy stimulates here, together with open banking, a digital payment ecosystem. After this reminding introduction, what did we do in the report? As Alex already mentioned, we compared 10 European countries in terms of their open banking readiness. I will name the countries in a minute. And there were 5 main points: the regulatory readiness, the digital readiness, the open banking infrastructure readiness, and about the readiness with digital account-to-code payments. And so this first 4 ended up in this report with the so-called Open Banking Readiness Index. And from March, we asked a lot of questions into the payments industry, and we composed the report of results from recurring market research, and we listened to the payments industry players and the industry. Let's start with digital infrastructure readiness. Well, it is clear for everybody that the digital communication infrastructure in Europe needs to be mature, and we will see it is already rather mature. Every country in internet access is nearly a standard in each country with fast growing digital commerce. And you see in the so-called table 1 that we compared 10 countries. We started in the Nordic region with Norway, Denmark, Sweden, the UK, then Germany, France, Spain, Italy, and finally Poland and Hungary. And what we can see and read from the table is that the mobile phone subscription per capita and the smartphone penetration and the 4G internet LTE penetration is more or less rather high. So there is already digital infrastructure readiness today. It is noted that 5G internet is launched in most of the countries, but the good news is for Spain, thanks to the telecom operator O2, there is already a penetration of 76% of 5G. A bit more interesting in this context is the digital banking penetration. And all the companies have achieved already a maturity with fast-growing mobile banking use, which we found out. Only in Italy, Poland, Hungary, historically, digital banking penetration is rather low compared to the other countries, but made significant progress in the recent few years. Very interesting to see is, compared to 2018, is the so-called open banking infrastructure readiness. By end of December 2020, there were already 450 open banking licenses for trusted payment providers registered in Europe by a financial service authority. The table shows where it is in which countries. And by end of the first quarter 2021, it was already 474. Interesting to note is that half of these providers are licensed to provide both account information and payment initiation services. The other important key finding is that all 10 countries researched have already opted for a domestic open banking API standard, or an aggregator-supported open banking solution in example in Spain and Italy. We will see in the future, I guess, a so-called Nordic API, which is not there by the time being. We have the open banking UK open standard. In Germany, there are two ones with FinTS historically and Next PSD2. France decided for a STET standard, and Polish API is in progress. Only in Hungary it's a bit different, because in Hungary most of the large bank groups are foreknown, and on a bank group level they run their own open banking API. The other interesting key finding is that by the end of 2020, there were more than 800 active open banking API sets already. The good news, the second not that good news is, so Europe has by today a fragmented market for open banking APIs. However, the individual banks in each country and the TPPs in Europe, they are supported by around 20 so-called API aggregators, which bridge the payment service or an app with the account at an account holding bank. So in a nutshell, the open banking infrastructure readiness has made significant progress, although the implementation of the open banking mandate is only nearly 2 years old. I said already a bit that open banking is more than open banking APIs and the open banking mandate. It has pushed the implementation of digital account record payment services. Each of these 10 countries has already implemented instant payment services. We are knowing that in Europe with the so-called SEPA credit transfer in the instant payment format. And we also seen that the non-Euro countries have implemented immediate payment schemes. The other important point is that most of the European banks, they are pushing digital banking service and mobile banking apps. That's not new. but they enable now with these apps and services digital credit transfer payments directly from the account at merchant POS checkouts or in the internet, and they also enable, in many cases, so-called mobile money transfer person to person. This includes already, in an early emerging status, QR code initiated payments at the POS, and of course mobile P2B money transfers. But what we also detected in this report is that there is a variation in the maturity of these type of domestic payment services. When going to the Nordics, we see that Vipps, MobilePay, and Swish are very strong in these countries, Norway, Denmark, Sweden, and we recently heard and noted that the Vipps and MobilePay and in Finland, that they are going to merge. In UK, we have faster payment, or we have Payme as Pay by Bank app. And in Germany and France and Spain, there are early, let's say, starting payment service on domestic level. In Germany, they merged a little bit with PayDirect, GiroPay. The Spanish banks decided to have Daisbisum. And interesting to see that in Italy, the domestic payment scheme Bancomat and Jiffy, the instant payment service of SIA, they are merged and have now banking pay by Jiffy by Bancomat Pay. In Poland, very strong BLIK. Only in Poland, in Hungary, it is by a bank payment, a banking app. And the use cases of these apps usually in development or existing is PS payments, online payments, and P2P payments between persons. So this is an early stage now of digital account to our payment readiness, but what we can hear in the industry, and we hear plans of a lot of companies and associations, that in parallel to card system, there is an emerging open banking payment ecosystem with payments directly from account to account. Condensing this for informations into one, we've defined a so-called Open Banking Readiness Index 2021, and it's based on the research results. And as we can see in the table, each of these 10 countries, they have implemented open banking strategy, they have implemented PSD2 and an immediate payment service. The digital account payment services are launched in some countries or already emerging in Sweden, Denmark, Norway, Italy, and Poland. The digital infrastructure readiness and the digital banking use is already rather mature, and we see slight difference between the companies. And I would say that digital banking use in Italy, Poland, Hungary in a year or so is similar to the other countries. And also the number of TPP licenses is very mature in these 10 countries. Coming back a bit to the open banking API, the UK, Germany, France, and Spanish have voted for a way to have a domestic standard. There are variations of a standard in Italy and Poland, and in the Nordics it's in progress. In Hungary, it's, as I mentioned, by bank group, and it's foreign bank groups which dominate the banking sector. But I would like to make a point beyond that, which means when thinking open banking a bit in the future, then the question of digital ID authentication and KYC services, I think, will become an important part of open banking or even open finance in Europe. And what we can see here in the last two lines of that table, the Nordic countries, they have already implemented, and they have their own digital ID authentication schemes, and they have implemented a Nordic KYC service scheme in the countries. and they are discussing anyway the so-called P27 initiative for the cross-border payment infrastructure. And so we have grouped here, for the time being, these 10 countries in 5 categories to be seen in at the bottom line. In category 1 is the Nordics. Second category is UK. Then we have Germany, France, Spain, Italy, Poland, and finally, at least Hungary. So that is a kind of summary of what the open banking readiness in these countries is. I would like to mention a few points as key findings. So the 10 countries have chosen different individual ways of implementing an open banking ecosystem. The UK, they have a post-Brexit strategy to build a world-leading digital open banking ecosystem, which goes beyond open banking, goes in direction of open finance. France, Italy, Spain seem to use open banking as a vehicle for a digital transformation in domestic payments ecosystems. In Germany, the collaborative approach of the savings banks, cooperative banks, and the commercial banks, which is specific to German, is used to develop an open banking environment. In the Nordics, there is a so-called Nordic collaborative model, and the P27 initiative includes open banking and electronic identity and KYC beyond payments. And in Poland and Hungary, like we would have expected from many Eastern European countries, they use it as a vehicle to leapfrogging away from legacy banking infrastructure. On the other hand, open banking has gained momentum, and it is playing a significant role in stimulating innovation in financial services, in implementing immediate account-to-account payment services, and launching digital payment service schemes enabling payments directly from the bank account. But for the time being, however, Europe has a fragmented open banking API market. I mentioned that there were more than 800 active open banking API sets in Europe. And the challenge of open banking API integration is aggregation. And aggregators act as a bridging gateways for API integration in Europe. In the table I saw that it was around 20 by country. So from my point of view, these are kind of key findings. Repeating a bit, the common elements in the country approach is the legal framework is in place, the open banking mandate and immediate payment schemes are implemented, and the digital banking services, online or mobile, with their open banking APIs, they are increased by a number of immediate payment services, which expand the mobile online banking service and mobile banking apps to be used for payments at merchant checkouts. And of course, because it's by law, all the European banking providers, they act as account holding service providers and cooperate with PSPs, ISPs, and other type of TPPs. From the consumer perspective, the most European banks have already added account information, payment initiation services to their online banking and mobile banking apps and services. And what I do as well personally, bank clients use the account information statement and payment transaction histories from their other bank accounts in the same app and have an aggregated view every time they log in what the status of their bank accounts is. That enables the client to undertake personal finance management either himself or herself in a single app, or to take advantage from so-called personal finance management service providers. And but beyond that, the European banks cooperate already beyond payments and their added value partners they are cooperating with, apart from PSPs, ASPs, and aggregators, are consumer credit finance partners, personal finance management partners, identity services, and or ETF broker advisors. So there is already open banking implemented the way that a bank A or B or whatever the name is has a digital banking hub. And if I would like to have a consumer credit finance, I end up on the website of a value-added partner or a different ETF broker. And so not all of the banking services needs to be in the same bank. It can now be like a cafeteria system combined between an account holding bank and a partner. However, some difference between the countries. I mentioned already the Nordic banks are pushing ahead a little bit with their pan-Nordic cross-border infrastructure and their Nordic KYC utility, which is more advanced than this approach of the other countries we discussed. In UK, we heard already that post-Brexit, there is seems to be a strategy to expand the open banking model towards an open finance framework, which goes beyond payments. I mentioned that there are different approaches towards open banking API standards. One option is a domestic standard. The other option is an aggregator supports all banks of a country. As an example, in German banks, they had historically the FinTS open banking, online banking standard, and now they have in parallel an open banking API standard. What does make the difference? Well, FinTS is used inside between the German banks, and the open banking API standard next-gen PSD2 is used if to connect to TPP partners. The other important point which makes a slight difference is that in some European countries there are now a new type of bank-backed interbank organizations which operate these domestic account-to-account payment services as for party models, which goes in the direction of adding instant payment and mobile P2P payments to the service mix. I think the audience have heard already of Vipps, Swish, Mobile Pay, and other type of these companies, although there is some maturity differences between these companies. So I hope my time is now over in the sense of that I was able to provide a small insight into that, what open banking in Europe looks like, what the future may look like, and that there was significant progress made after September 2019. Thank you.
Thank you, Horst. This is Jim Wadsworth here. Hopefully you can hear me. As Alex said at the outset, I work for MasterCard, and we were very pleased to work with PCM on this piece of work, this project, this report. And I hope everyone that's had the chance to read it, or that will read it, will agree that it's a really helpful addition to, if you like, kind of the summary of knowledge about the progress of open banking in Europe. Why did we get involved? Why did we want to participate in this piece of work? Well, open banking is an increasingly important topic for MasterCard. I've been leading what we've been doing in Europe and elsewhere for the last 3.5 years. You know, as this slide implies, we have services live in various parts of the world. You know, we started off in Europe from a connectivity perspective, our Connect offering. Public domain, we're working with clients, large clients like Lloyds Bank and Tesco Bank in the UK, for example. But we're increasing footprint and coverage over time. And a very important milestone for us was the acquisition last year in the United States of Finicity. Finicity does a couple of things. They're connected to now something like 10,000 banks in the United States. But the other thing they do is take the data that comes from those consented, permissioned accesses to customer data to turn that into insights of value, particularly to serve the needs of the lending industry, although they do other things as well. It's a very important part of the domestic lending activity in the United States these days. And without, we haven't kind of gone into detail yet, but we certainly have said we have the ambition to bring that sort of capability to other parts of the world as well. Beyond connectivity and Finicity's activities, we're not stopping there. So, for example, our advisors business have been providing insights and help to banks and many others around the world in terms of how to respond to the open banking phenomenon. The Enrich proposition referenced on this slide, helps banks with digital engagement with their customers, and, for example, helps those institutions to deliver a very customer-centric personal financial management type proposition. And we're also, we also have our Protect service live in Europe, which helps banks to make sure that, when they are being engaged with by a third party looking to access customer accounts, that third party really is who they say they are. So open banking is a very important topic for us. On the specifics of this report, I think Horst did a brilliant job, both in terms of leading the writing of it, but also his summary just there. I was personally very encouraged with the progress that's been made in the relatively short period of time since PSD2 came into full force. I thought it was, it's very interesting to see both the similarities and the differences between different European countries. Unfortunately, we could only pick 10. I mean, I would also say that we see open banking happening pretty much everywhere in the world now at different speeds and in different ways. It's an exciting topic, and look forward to hearing what you think in terms of the questions. So to that end, back to Alex.
Thanks, Jim, and thanks, Horst. Yeah, agree with you, Jim. There, it was insofar as only 10 countries, but a very comprehensive report and a fine overview there from Horst. So thank you. So for the audience, just so you know, we're moving into the Q&A section. We do have some questions that have come through, but obviously you've got two experts in their field, senior members of the payments industry. So if you have questions that you want to pose to them, now would be the time to get those in. Also, you'll see that the slide has just been moved across. So if you aren't familiar with this report that we've been talking about, I would encourage you to visit the URL down there at the bottom. Make sure you download yourself a copy so that you have the opportunity to read through in greater detail what's been going on in those countries. Okay, so let's try and jump in on some of these questions. And Jim, as you've sort of done less of the speaking so far, I'll start with you. I think it's a kind of general query around the report. Were there any notable surprises that were discovered from the report? Was there any kind of moment when you were reading through it that you kind of went, wow, I sort of didn't know that, or I didn't realize it had swung that far, or perhaps some area where it was less developed than you'd potentially thought?
I suppose I wasn't too surprised in that, we're pretty close to what's going on in those countries. We talk to our customers who are, domiciled in and active in those markets on a daily basis. So I guess in that sense, I wasn't, massively surprised what came out. What it served, what I guess, stepping back from any one country though, what was really exciting to see was just how much is going on. It's interesting to see how different countries, different institutions in some ways, in some cases, are leaning into the open banking opportunity. In different markets, of course, start from different places. I mean, for example, Germany with the sort of heritage, if you like, of FinTS has arguably been doing this sort of stuff for actually quite a long time. The differences are interesting, kind of somewhat reflective perhaps of where different markets start from. Surprised, not massively, because I guess we're kind of in this detail anyway every day. But definitely excited, and I think it's a great summary of everything that's going on in its different ways. And you can see the real pleasant surprise, if you like, in that sense, was just the sheer pace of change in a very short period of time. Given how complex some of these things are, how what a big ask we're sometimes making of our end customers, consumers and businesses alike, in terms of getting them comfortable with giving third parties access to their bank accounts, which, let's face it, is often quite a sensitive topic. And the fact that this is moving at such a pace was perhaps the most pleasant surprise.
Mm-hmm. Sure, Horst, from your perspective, you were the lead on the research. Anything in particular that you saw, again, a surprise to you, or is it, as Jim said, just exciting and glad to see the industry all pulling in the same direction?
Indeed. It was no real surprise when researching and finding the results of this report. However, I was surprised that now, in some countries, there seems to be a plan to have a strategy for domestic payment services. Well, thanks to the EU regulation, there are only in many countries there's only STT, STD, and STTs as payment instruments. But and we have a lot of domestic debit schemes in Europe still today. And in those countries, it was for me interesting, surprising to see that there are emerging account-to-account payment services, and that there's now a reinvention of interbank organizations to launch and to push these kind of account-to-account schemes. That is for me the surprising point. It was not surprising for me that account information is now part of digital banking, account aggregation, and it's faster than I expected it. So I think these are the 2 points which I would like to raise here. Thanks.
Thanks, Horst. There's quite a bit on APIs, and I think from my perspective, I don't know if it's a surprise, but it seems that every single country has a different view on these API standards. Should that be a concern, Jim, that we're not seeing an API standard appearing across the European region? Is there a place for an open banking scheme which standardizes them? What are your thoughts on that?
Yeah, no, thank you. I mean, a couple of different perspectives, I suppose. We have, if anything, a plethora of open banking standards. I guess probably the standard that has the sort of greatest adoption in sheer numerical terms is the Berlin Group Next Gen API standard. But we see, as you say, quite a lot of de facto national standards emerging. Whether I happen to be based in the UK, the UK has its open banking standard. There's STET in France. Poland has a Polish API standard, for example. They all have their similarities and differences. And I think from the perspective of an entity, an organisation that is really only interested in addressing a purely domestic audience, that kind of complexity perhaps is less important. But certainly when you start to think on a regional basis, the multiple standards, that does create a level of complexity. I mean, that said, to some extent, that's the job of the aggregator community to sort out. The aggregator business model kind of has 2 roles to play, really. One is actually, if I'm a third party wanting to take advantage of, and that includes, by the way, banks themselves, wanting to take advantage of the open banking phenomenon, then I have a choice. I can either connect to all the different bank APIs, or I can get somebody else to do it, and that's what the role that aggregators fulfill, taking that work off third parties. As part of that, to the extent that different banks are operating under different standards, it's the job of the aggregators to kind of deal with that complexity. So that that is one solution to that problem. But I think your broader point on a scheme is interesting. I mean, one dimension of that is certainly around standardization, but actually I think in many ways, there are other reasons, perhaps even stronger reasons, for some form of quasi-scheme type entity to exist. And I've talked about this before in other contexts, and that's around consumer protection. Horst mentioned that kind of the re-emergence of interbank organizations for, if you like, kind of domestic payment, account-to-account payment mechanisms. And when it comes to the open banking component of that, and I do think these things will coalesce over time, if you like, one of the things that open banking payment doesn't give is the same level of consumer protection that one is perhaps used to from card schemes like MasterCard. And so to the extent that these sorts of payment types are going to get broadly adopted into e-commerce, one does need to think about things like what happens when things go wrong, how are consumers' interests protected. So I think there's a logic there for some of the sorts of things we're used to from the quote scheme mindset. We'll see how things play out over time. But going back to your point on APIs, it's certainly the case that as open banking becomes more and more global, if we're going to kind of see the real benefits from it, then some greater consistency is likely to be helpful.
Mm-hmm. Thank you, Jim. Horst, anything to add on to that one?
Well, for me, interesting to see that there are some, let's say, standardization initiatives on European country level, and but maybe it's too early to decide or to see who could be the potential open banking API de facto standard. Although this Berlin Group standard seems to be used by a lot of banks, and maybe by number the most used open banking API standard. I would not wonder if someday that an EPC, European Payments Council, or somebody like that feels encouraged to try to offer a so-called open banking API standard. I don't think for the time being that there will be a regulation, but one never knows in Europe, and that would be my point of that. Thank you.
Okay, thank you. So APIs seem to be quite a hot topic around this report. The other one that I think is cropping up a little bit, and Horst, maybe it would be good to start with you, because I know it was something we discussed offline, particularly around the order of the countries. This is around EID and eKYC, which certainly put the Nordic countries ahead of the UK, which some people would listening in would argue is further ahead for various different reasons. But that was one of the criteria, and in particular, those Nordic countries matched up much better on the EID and eKYC. The question here is, to what extent do you think that a mandated or widely used EID, eKYC system would help crystallize the open banking market?
Well, for me, interesting to see that in the Nordic region, there is a strategy for that to organize KYC processes and electronic identity. There's an EID regulation, of course, in Europe, but maybe the services are not in place. And I think it is good to see that the Nordic region has understood that EIDs could be a help for not only for banking service, for payment services, but also for open finance service in the future. And because this is like an individual, an EID is like an individual a digital passport for a consumer when he does payments. And historically in the Nordic countries, the bank IDs of that type are used already for online payments for a long time, and the people are accepting that, and they are using that when confirming online payments, confirming consumer to governance processes, etc. And I think there are also other early initiatives in other countries. So the KYC process and the EIDs process is or will be part of a digital commerce or digital payment platform in the future. That's my point of it.
Mm-hmm. Thank you, Jim. EID and eKYC as an enabler, for open banking. Do you think it's as important as we feel it was through the study, or do you think that those things will just naturally occur in time?
I think what one does see is, part of the joy of doing business across the European region is it's far from homogeneous. There's lots of differences, not just linguistic and currency, but also in terms of culture. So that which is true in the Nordic countries, the climate, if you like, that made it possible, and as Hall says, widely accepted, the digital ID services that exist. I'm sceptical as to whether in some other countries, whether that is going to come to pass anytime soon. I mean, yes, there are pilots going on in various places, but you and I both know, having kind of lived in the UK, that UK is not just resistant to to political integration, but it's also something that it's historically resisted on terms of national ID schemes and things like that, for better or worse. I think it definitely helps if you have that sort of thing in place in terms of accelerating adoption, but it doesn't mean you can't create broad-scale adoption of these new services without such a thing. Would it make it easier? Sure. And is there lots of interesting kind of bits of work going on in different parts of the industry to see what might be possible, certainly. But I don't think it's an absolute must-have.
Mm-hmm. Interesting. Sticking on that line then, one of the questions here is what major factors need to progress for open banking to become more prominent? Mm-hmm. I mean, it's from your perspective, if it's not EID, and the answer might be that you say, well, we're cracking along at a great pace, but if there was a few areas that you felt as a region we could pull together and do better, what do you think those might be?
Yeah, I mean, coming back to the UK for a second, it was kind of an interesting laboratory for open banking in the sense that its domestic regulation came live 18 months or so ahead of PSD2. And what we saw has been, for that first 18 months, maybe even 2 years, whilst bank APIs were being implemented, being optimized, performance sorted out, and frankly, kind of third parties and others working out how best to take advantage of them, one didn't see a huge amount of usage. But then kind of probably about 2 years in, we really started to see the explosion of usage in the UK, and that's initially was of course data use cases for the most part, but now we're also seeing quite exciting acceleration of various payments use cases too. And I expect to see the same play out. Okay, maybe slightly different timelines perhaps, but I expect to see the same play out in many other European countries as well. The first and most important prerequisite is that bank APIs are in place and performant. And that undoubtedly wasn't true for every bank in every country on the kind of implementation date, if you like, of the directive. But here we are now, coming up to 2 years post that date, and that position is much different, and that's great to see. And we're starting to see the growth of third-party registrations in various countries. We publish on a quarterly basis a tracker of that, and that shows consistent growth of third-party registrations, and that in itself is also a lead indicator of organisations looking to kind of gear up to take advantage of the possibilities. So I'm very optimistic about that. I mean, first and foremost, absolutely, the regulatory intervention was very helpful. Secondly, bank APIs getting in place is obviously very important. But I also think the next step on the journey beyond businesses and consumers getting comfortable with using these services and third parties getting used to how to market and create services that actually create value to end users. I think the next step in the road is a move beyond kind of purely payment account access to other forms of accounts as well, often referred to as open finance. And we're seeing kind of regulatory consultations and the like in various European countries and at regional level as well. And I think that's an important next step because I think what we can see in the US is that really has been a very important part of the acceleration of a wide range of services that added a lot of value to customers and businesses, like consumers and businesses alike.
Mm-hmm. So actually, just while I've got you on that one, there is a few queries coming in around open finance. Is it possible to get a sort of quick 101 on the difference between what open banking looks like and what open finance looks like?
Yeah, I mean, sure. I mean, kind of open banking is generally centered around, I guess, the scope of PSD2, which is essentially payment accounts. So, kind of a lot of the services therefore are centered around, kind of the data that's available in a checking account, a current account. What one ideally would want access to is not, to create a fully rounded so-called financial management service would be also access to savings accounts and loan accounts and so on. And some banks have done that kind of, even though regulation hasn't forced them to, so, in some cases you can absolutely do that, but it's not necessarily consistent. So, step one on the journey to open finance is going beyond payment accounts to other forms of bank accounts as well. But then it's also absolutely into the world of pension account access, investment account access, and any other form of financial account that we all, whether as individuals or indeed as businesses, take advantage of, because the same kind of benefits that can accrue from broader access to the data that sits in a bank account, a checking account, for example, that absolutely can extend into that open finance world. For example, if I'm trying to get access to finance, to credit, it's helpful for a lender to have it's very helpful for a lender to kind of, or who is doing the analysis for them, to have access to my current account history. But it's also very helpful to know kind of what my existing savings, loans, and investment balances are in terms of getting that full financial picture.
Mm-hmm. Mm-hmm. Brilliant. Okay, thanks, Jim. Good. So, so we've covered off the majority of the report there. I think there's a sort of more broad question here, and that is how does open banking meet the needs of the underbanked, and how financial inclusion is impacted through open data and banking by providing access to better choice and end use of services? I guess that ties in a little bit with the open finance, but specifically, I guess, around underbanked and financial inclusion.
I'm guessing that's a question for me, Alex. Let me have a first go, but Horst, please do chip in. Yeah, I mean, we think that, I've already touched a couple of times on the sort of lending use case. We think that open banking is a very important part of making it easier for businesses and consumers alike to get access to loans. If you think about, the modern era that we exist in, with increasing so-called gig economy employment, so kind of people having multiple, relatively irregular sources of income, that doesn't play well to traditional ways of assessing people's creditworthiness and the ability to afford a loan. And yet, absolutely, there are plenty of people who, if you add up and look at the trends in terms of their income and their expenditure, absolutely can afford a loan. But traditional means of assessing fall down, especially if they haven't historically had a loan. So that first step on the ladder, how do you get your first loan? How do you improve your quote credit score unquote based on the fact every month you make your rent payment or you make your utility payments? That sort of data is actually gold dust when it comes to assessing the credit worthiness of an individual. And the same logic absolutely applies to a small business as well. Early stage small businesses, it's often quite hard to get loan funding, or at least at affordable interest rates. So we think that the opening up of access to that data and the creation, stimulation of new ways of assessing individuals and businesses' creditworthiness is a hugely important part of financial inclusion. We think it will have big benefits, not just for those individuals or businesses, but actually at a economy-wide level as well. Because at the end of the day, small businesses are often the engine of economies. If it's easier for a small business to get finance to help it expand and grow its business, that will have knock-on beneficial impacts on employment and economies as a whole. So we think that's a very important part of it. We've seen that happening in the US through the Finicity business, and we expect that to play out in other regions as well, and certainly including Europe. That would be probably the biggest single thing I would call out.
Okay, thank you. Horst, anything to add on that?
Not in the direction which Jim presented and discussed very well. The other way is for so-called unbanked people is, we know that from MPs are in Africa, for instance. Unbanked people can be included in the same way because they may have a digital or a physical basic account, which is of course limited regarding loans, etc. But unbanked can also use the same mobile banking apps or payment apps to be part of that environment. And if in the case the unbanked people have different accounts, basic accounts by different banks, then they may have used also the account aggregation services. So from that point of view, they are included, I would say.
Yeah, no, I absolutely agree with that, Horst, and I think that's exactly right. I think the other thing you can see, open banking helps people who are maybe less confident with managing their money by just kind of the tools that are starting to be created. They're basically taking advantage of open banking access to get access to the raw data, but then the value-added tools that are being created on top of that to help people to better understand their money, to be able to budget, to be able to essentially manage their finances. I think again is hugely beneficial in terms of getting people more comfortable with, if you like, managing their money and frankly keeping out of trouble in some ways.
Brilliant, thank you. Okay, so look, guys, we're reaching the top of the hour that we had. Any final comments on the report or any area that we feel we missed? Jim, a few final words from yourself and MasterCard?
Yeah, look, I think it's a really great summary of kind of where we are at. Approaching 2 years after the implementation date of PSD2, and I think you can see very clearly the sheer amount of activity that's going on. Yeah, fine, of course, different markets are at slightly different stages of adoption when you take a snapshot view, but I think it gives you a really great sense of, if you think more generally rather than looking at any individual country, the sense of direction. You can almost map. We cover 10 countries, fine. You can almost map any other country onto the same sort of 5 categories to understand where they're up to, and indeed where they're likely to go when you kind of look at the next steps along. And I think it's a great summary. So credit to you and the team for what you've produced, and I hope that readers find it helpful.
Brilliant. Thanks very much, Jim. Really appreciate the kind words, and thanks for taking your time to be on this webinar today. Horst, of course, thank you for all the hard work that you put into the research and for the great summary that you put together for everyone today. To recap for the audience, this webinar will be sent round to you guys later on, so you'll be able to listen to it again. You'll be able to see the presentation again, and share it with colleagues. Also, once again, I'd like to just encourage you to take a look at the Mastercard microsite on open banking, where the report sits. Lots of very interesting information there, as well as being able to download the report. So thanks very much, gents, for joining, and thank you very much to the audience for taking your time to log in and listen. We look forward to speaking to you all again face-to-face in the near future.